Now, I thought we were done with FTX. I thought it would be something that would end rather quickly, but it looks like this is going to be dragging on for a while. The interesting part is that there's so many moving pieces here. The first thing I want to cover is the FTX Contagion. I'll show you the other companies that have been exposed, at least so far in what we know. The second thing is more updates surrounding the whole debacle. And the third is why this happened. All of that and more. BlockFi is a company that was highly recommended by all the YouTubers out there. Essentially, they were giving you 8+% interest for nothing, it seemed, and it was such a fantastic idea. You put your cryptocurrency with this company, they take care of it for you, and they give you 8+%. Now, obviously, that's something to question. Where did they get more capital from? How does it all work? If they're not going to be charging you these fees, it seems to be free money, right? Odd. Anyway, BlockFi prepares for potential bankruptcy as crypto contagion spreads. BlockFi, financially entangled with the now bankrupt FTX, is planning to lay off workers and exploring a bankruptcy filing itself. So this is one that I believe people should have been aware of on their own. If you're looking at what the YouTubers are going to tell you, well, obviously they have a financial incentive to recommend this service. But you have to understand that, if they're willing to offer you such high interest rates, it should be questionable to you. We have another one. That is, there's growing concern that Gate.io and Crypto.com could be the next two giants in the crypto ecosystem to experience financial troubles. And they just go on to talk about it. It's a rumor at this point, but I wanted to show you that a lot of these companies are seemingly interconnected in some way. And it just shows us that what we believe to be safe and secure may not necessarily be so. FTX says that it could have over 1 million creditors in new bankruptcy filing. In addition to this, I would let everybody know that the names of every creditor might be public at some point. So we're going to see everything. I have a feeling that certain parts of that might be redacted, but we'll see. I just want to let you know that's a lot of people involved here, and we're going to get a list of that, hopefully. FTX crash is eerily similar to the Bernie Madoff scandal, according to this ex-regulator. Now, I don't know. Bernie Madoff, what I find interesting is that Bernie Madoff was a very successful person in the financial industry. He had so much success. And yet, he wanted to take it further by creating this Ponzi scheme. It's just never enough for some people because they get to a level and they think, well, okay, well, what's the next level? I've achieved this, well, I can achieve that. And you see they create these scams and schemes, and it's very concerning to show us that this could be happening at a lot of different companies. Democrats took his shady crypto money. Will they keep it? Now, this article was just written essentially to say that you had a lot of money being given to different places. The Democrats got 40 million, I believe the number I showed you on Open Secrets in the previous video or the one before this related to FTX. And essentially what they're saying is, oh, now that he's the bad guy, are they going to keep the money? Well, we'll see. We'll see about that. FTX founder Sam Bankman-Fried attempts to raise fresh cash despite bankruptcy. Now, I don't know if this is true. I can't believe it. It's like, do you want to give me money so we could definitely throw it down the toilet? Like, is that what's happening here? Alongside a few remaining employees, SBF spent the weekend calling around in search of new commitments from investors. I really don't understand this. The company, nobody's going to want to do business with them after this. I really don't understand. Nobody's going to put their money in there. So I'm not sure why an investor would do so. Well, let's look at the next aspect here. This is, you could see it probably, and then the font's a little small, link in the description if you're interested. This is the U.S. Bankruptcy Court District of Delaware. You're seeing the bankruptcy petition, Alameda Research. Okay, that's on the left side, Alameda Research. And it just breaks it down. And so this is part of it. You're getting a little bit of information coming out related to these companies. And I think it's important just to see that everything is kind of happening, and we're going to get more information as time goes on. If you see any relevance to this particular piece of data, you're welcome to take a look. Sam Bankman-Fried facing possible trip to the US for questioning. I guess when it's, I don't know what to say about this, because they're referring to it as a trip, like he's going on vacation. Okay? Very strange way to suggest, but anyway. Conversations between American Bahamian authorities ongoing. Bankman-Fried has been interviewed by the Bahamas police. There was the suggestion that he had gone to Argentina. That was not true. His plane went there, so maybe something did happen, but he wasn't on it as far as I'm aware. So that's just developments as they happen. Now, very unusual, the tweets that he was putting out over like a 24-hour period. First word he put there was, "What?" And then at the end, what he says is, my one goal is to do right by customers. I'm contributing what I can to doing so. I'm meeting in person with regulators and working with the teams to do what we can for customers. After that, investors. But first, customers. My goal, clean up and focus on transparency, make customers whole. We will see if people get anything. Maybe they will get nothing. And if you are one of those people, how did you feel convinced by this to leave your cryptocurrency on the exchanges? I think that is a big, big concern. And a lot of people were being told that it's okay. It's okay to have your money on the exchanges. So I think right now what I wanted to cover was the next level. You see, all of these cryptocurrencies, they're unregulated, and we need more regulation. But the next level of this, in my opinion, is a central bank digital currencies. That's where they're going, the digital dollar. New York Innovation Center to explore feasibility of theoretical payment system designed to facilitate and settle digital asset transactions. So when they say that, here it is, the CBDC is here, oh my goodness, it's happening, and they get a lot of clicks for that stuff, they're not anywhere close to that. But they're definitely talking about it. They're definitely starting to look into it. But I just wanted to bring that to you. I think that is the next step. I do believe so. That's what they're going to propose. And I think all you need is a good crisis, right? They'll never let a good crisis go to waste, they say. Okay. Now, we will see spectacular failures, CEOs and investors, on what the end of cheap money means for tech. You see, a long time ago, we had this thing called prudence. We had this thing called, risk analysis and management, but that really did stop. I mean, after the financial crisis, then it took to the next level after 2020. I mean, people are just saying, no, I'm not going to have any risk management. I don't need that because the Federal Reserve will just print money. Well, suddenly, that has really changed in an era in which interest rates have moved up. And so things have changed in this respect. And what I wanted to make note of here, you can look at it for yourself, but when you are able to sweep this under the rug, you can do so for a long period and hide all the nastiness. Things that we saw with FTX, for example. But as soon as interest rates rise, that rears its ugly head. Household debt soars at the fastest pace in 15 years as credit card usage surges. The same situation. Increase interest rates, you start to slow down the economy, you make people pay more on their high interest debt, and you get this. This is unbelievable to see how pressured people are, and credit card debt is the one that's going to charge them over 18%. Big time, right? Interest rates on retail credit cards are crazy high, with some topping 30%. So a lot of these stores, big box stores and so on, they have their own credit card, but you better make sure you pay that off before the end of that cycle, because you're going to be paying a lot of money. Home buyers need $107,000 annually to afford the typical US home. That's up 46% from a year ago. You see what happens here? Oh yeah, no problem. We can have an infinite boom in real estate. All we need is for interest rates to remain at zero forever. And as soon as we go from a place where interest rates are rock bottom to a reasonable level, and mortgage rates, of course, much higher when they're where they were, you start to see inventory piling up in a lot of areas. Why? Why is that the case? Well, I think it's pretty clear. They're making a big change right now, and suddenly we don't have as much of the inventory issue that we did before. Ad market worse than during the lows of the early 2020, according to Warner Brothers Discovery CEO. So this is an issue that's been going on, of course, for a long while. And you just see it getting worse and worse and worse. And obviously, where people do not want to invest, they're concerned about recession. And that's going to have dramatic effects on the economy as a whole. Of course, ads not that big of a deal, but what does that mean for that company? If they're not doing ads, they're not getting sales. If they're not getting sales, they lay people off. And so, of course, this is something that we have to see. We have to keep an eye on with what's going on with FTX. I'll bring you all the updates as I can. And of course, don't forget to subscribe right down there below. I'll see you tomorrow.